Hey, good people, how are you doing? On the road, traveling. We were featured in Cointelegraph with a number of other analysts regarding Bitcoin's progress to the downside. This was June the 13th. We are now the 19th. That's almost a week later. Many of the analysts were saying Bitcoin has supported 23K. But other analysts warn of a possibility of a round trip all the way to 8K. That was my good self. So a large part of the people around the 23K support are based on moving averages. In other words, a slowed up version of price behavior that is smoothed and lagging, that has been optimized since the period that Bitcoin has been in existence, which is, call it 2010, with any reasonable form of liquidity, less than 12 full years. Which has birthed into a period of complete quantitative easing where money was being devalued, have optimized the smooth lagging price version and appointed, once they've found the idealized moving average for a number of relative lows, which they've circled in the blue here, has pointed to their belief that 23K would, as a result, turn into. Now, the important thing to note is, even if this was accurate and correct, you certainly still had in the COVID an immensely deep, dark wick that showed up substantially below that on a number of occasions. And I would argue even over here as well in the 2015 period, and to quite some respectable degree. So the notion that there's any pinpoint accuracy in that, yet you can still claim, for example, what probably needed to be a 6,000 low, an actual sub 4,000. You traded a tick or two under 4,000 in the end. That is, as I say, 2/3 of the value. So how useful it is, if we set aside how useful that is if we're eliminating wicks, I also want to highlight how it is not based on any key price behavior levels that were set on the way up, which is the key levels of significance approach that we take. Moving averages is a lagging version of price behavior with reduced, smoothed volatility, working its way through it. We use a combination of volume and key levels of significance for where the levels will be. And in our chart that was featured, and these are also similar. I don't want to go too deep into the other charts. Ours are invariably quite messy because they're detailed draws. If you have a look at this, ours was highlighting where the key levels of significant clusters were, where you're likely to run to. Markets pursue the maximum point of pain. And with this accumulation that we put in the pink box area, so I'll pivot to blue here, this accumulation zone, which was support during the period of bullishness, note the falling wedge and the then bull market, back up, let's fatten that up a bit, turned into something that had to be broken with momentum, and that occurred when you were breaking it, particularly when you were having bear structure, bear flag on the top of the accumulation box. After breaking it, we suggested you would rally into what's now a zonal resistance and then spill further. And then when asked how much further, in our community updates that we did, we shared this chart that we'd given earlier to our community members. We highlighted a cluster of key levels of significance. Many of those are not seen by other people because they do not have the 2.5-year continuation pattern structure that we've referred to as the first cup gold nugget, which was almost the first real break it could take after making the low 2 of the COVID-19. So if you're a regular follower of ours, Bitcoin's 20K high of 2017 and the break was coincidental to a printing of $7 trillion and dollar. And this is the value that, being an FX trader that always understands there's pairs, we recognize the other half of the pair. Everyone else has thought it's all about on-chain analysis and Bitcoin. And this is the major failing. And now they are learning it in spades in terms of that. So the moving average on Bitcoin actually takes nothing about what's going on in the macro and the USD into account at all. It's kind of like me doing bicep curls with my left arm only. and everything else can wait. I just have to really look after that left-hand side and it all gets sorted. Well, guess what? You do very disproportional physical development if you do that. And in the same way, you do very, very disproportionate analysis of the markets when you do that. And coming from a long-term historical trader, initially in equities, then FX, options, starting really young and early in life, really passionate about markets, you actually have far more background for analyzing the crypto, and you're more prone to being dispassionate and less prone to be stuck in belief systems. Anyway, going back to here, the cluster that we identified when you might get a period of rest and potential temporary support was in the first green box. Note it was the first of many. It's not a bottom call. It's a, hey, you're going to run a number of key levels when you do this. And as a result, you might get some hammering. You might get a rising wedge only to fall later for new lows. You might get a bear flag only to fall later for new lows. Or possibly, although I do not assess this at this point in time, a bottoming, inverted head and shoulder and a bit of a reversal. That could be the ultimate bottom or could just be a partial bottom and a longer rally before coming back down later. So that's a more medium term move to the upside before spilling later. Now, where were these levels? Now, this is going to be hard for you to see, so I'll bring up the original chart. They're still on my original chart, but I highlighted that there were 3 lines and we did them not too dominantly. That was the legacy high of 2017 on the exchange here in Bitfinex. Now, that was actually a touch less than the 20K. Now, we also left the key level of significance out because those were so synonymous of 20K itself. So you had 19,980 or 890, which is that line that you've seen there that we had drawn, and literally superimposed on top of it, give or take $1 or 3, is the 20K key level of significance. Markets chase the key point of pain. Many a stop will be set there. Absolutely. Then what was this other line here that was showing? And I will show you these. This is now my zooming on their chart. I, of course, have the original, so we'll dig it up. And this was our interim level 2 of the first cup gold nugget, the macro 2.5-year upside break for Bitcoin. Now, this was the target, the original target at 25K. We warned you of that one. This is the second interim. Ours is the only methodology that gives you points of pause on the way up. You also paused here, and it was the most significant pause and pullback in what was a very one-track bull market run. We called it from the second most important HVF that sat on the funnel, a little wind up after a tiny head and shoulders here. The most choppy behavior you got before running the target here and then delivering the overperformance occurred at our second interim, which is exactly where it's meant to occur. So you made that interim level target. It's not a closure point. It's a point when, hey, things might just get a bit more choppy here. Be emotionally calm. Don't sit on the screens. Don't trade lower time frame. You got a dip, pull back. You got a marginally higher high, dip, pull back, and then you melted up for target. You actually got a little squeeze there and you went up. So this level has also proven itself significant on the upside and is now in that first green cluster box of key levels of significance to be run. Then there was a third, holding up 4 fingers to confuse you, a third one there, which was the bear flag, which was quite a clear-cut bear flag that was as a result of that. That color's clashing a little bit. I've already drawn so much. These are draws on top of draws. The bear pole, the structure here. Now, this entire structure all occurred around, yes, you guessed it, the 30K key level of significance, plus the head and shoulder that we called here on the real high. And this was the real high of Bitcoin. Momentum carried it over 69. That's why the marginally higher high is very dangerous. When I look at all matrices, the money coming into Tether, the money coming into all other elements, this was a momentum and a hype-driven boost. It was not accompanied with the same degree of volume. This was your full surge high, really, in terms of conviction. You went marginally higher, and it was quite clear that the conviction was reducing already. So this was the head and shoulder target. This we called in advance of occurring, and we called saying keep accumulating the falling wedge on the dips, this is a key level. So you had the 30K and you had the 29,000, and I think it's a couple of hundred. You won't be able to see the value. So there's the 30K in blue if you're looking to the right hand side, and there were the targets at 29 in around just there. So you had a flag that was dissected by key level of significance, 30K head and shoulder target 29. You stalled at that area after breaking with momentum our accumulation box, setting up your bear pole. You then have the flag split, which is forming just above and below, the price behavior is above and below the key levels of significance of 30K and 29,000, 200 or 300. Then you go on your sell pole. And we said here on this chart, and to everyone else, the next area is you need to run these three, and then you will potentially, on balance of probabilities, have some degree of relief rally. We are not calling a bottom, but we've even updated this when you'd run the first one and the second one, and we said you still got to do the 17.8 to the downside. We went to sleep. That, of course, has been done. So now what do you get? You may do, now you've had one flag here, macro flag. Where was that flag? Key level of significance, 42K. That is the head and shoulder neckline for a head and shoulder that is still live and in play. More on that in a bit, in the blue there, redrawing it in the blue. And the 40K level. So here you have a 40K key level of significance, a 42K key level of significance, which is not just 42. 42 is not a special number. It's the neckline of a new head and shoulder on the final high that was 69,000. So you've had a flag, a major flag here, where everyone called us wrong for this being breaking to the upside initially on a Fed quarter point rate hike when they were miles behind inflation. That flag was at the 42.40 level. This flag is at the 30 level. And guess what? You've just plummeted down through the 20K, the previous high, 19,900, and a smaller bull flag's target. All here. 3 levels in a cluster box. That's your next level. The moving average guys going 23K 1 week ago, 6 days ago. Sorry. If you're breaking lower, this is your cluster where you get your next period of support. A very small percentage of me says final bottom. I don't assess that to be the case. I look at the macros that crypto people are not looking at. Dollar dominance theme, NASDAQ weakness and stock weakness, and the driver for all these things, debt markets. Debt markets are collapsing. We are in reset. They've called they want their reset. You have to kill the old system. It's a debt system. The death of the debt market is not supported for crypto. It's supporting a collapse, a short all risk ons, of which the highest beta, most liquid, which dies first, is the crypto market, including Bitcoin, which actually has sufficient liquidity. So that is the target box we identified, and then you rest. Assuming continuation, which is our default position, where do you go next? So let's leave this chart that Cointel featured, because we even pointed out that you can round trip 12K. So Hun said 12 and then down to the 8-10 range. So 15, 12, and then the full roundhouse trip all the way up and over down to 8 and 10. And that can still be run. I just gave, here's your next 4 or 5. So we're not saying 8 to 10 has to be a bottom either. And we're not saying you get down there. We're showing you the key levels where it's likely that you will run through collectively with momentum in between resting after you've had those key levels. So this is typical of how we've analyzed this break of this accumulation. Resting, break down. So let's go to our take on the charts and talk about this a little bit more in this great Bitcoin sell-off. The other key element that was utterly legitimizing everything we said was this descending triangle, flat, low volatility squeeze on our box. Look at these levels here. So this is on a shorter time frame, no longer daily. We're on the 2 hour. You spilt out of the last flag there in the orange box. Down, down, down. No 23 support, no 25 support, nothing at all. Straight stopped a couple of dollars ahead of the legacy high. This shows the 20K and the legacy high. Again, because they're so similar, I've not drawn it, 19891. But there's actually 4 levels in there. They're just so tight. So the 20K was marginally higher than that and was running like that through there. The 20K, 19891. And then the 1885, where you got a small rest on the lower time frame, little bit of a hammer, up, no real momentum. We said we still expect the bear flag target, and then the target cluster box has been deemed as dealt with. There's been a lot of targets run. You've spilled through that. You're likely to get some upside rally. Again, not a bottom call, a possible flag, a possible rising wedge, possibly a bottom, low percentage I assess to that. So I have a pie diagram of all outcomes, and I am probability assessing. I don't tell you that I know. Nobody knows the future. I am doing probability assessing. If things pivot, those are dynamic and adjusting at all the time. That's what you get when you go to themarketsniper.com. You get my ongoing adjustment on the basis of price behavior, key levels of significance, HVF method, what is the more likely outcome, as it is dynamic and adjusting all the time. So we said the highest probability is a further run till 1780 is done, and then some sign of pause. So let's have a look at the live charts now in terms of how that's been going down. So here you go. Here's the live charts. These were very much the ones that we took from that we actually did the drawing. Let me just remove those other overlay draws. So this is your key levels. Now it's very messy, and people say, oh, you've got messy charts. It's the value of doing real hard technical analysis. Note, most of my lines are level lines that are horizontal, not moving averages, not varying lines. Why? Because price is the determinant. Key levels of significance are recognizing that price actually is the psychological element. People remember when. You remember what you paid for your house and what you sold it for. You don't remember the moving average value of it for the number of years that you had it. The key point for whether you made some money or in the money or out of the money or at break even are determined by price, not the moving average of 30 years optimized that happened to nip the current lows after various crises that you've optimized to on a specific data set that applied for that period of time that no longer applies in another period of time. Bitcoin was born into a QE proliferation era in 2010, QE 1, 2, and 3. It is not and has never, as a 12-year-old, which is barely reaching puberty, ever faced a debt-based collapse. Okay, so all rules and all references around moving averages of the past have very little likely bearing for the future. Hence why previous performance are not of past are not indicative of future performance. What we do is far higher value. And I continue to assert this, and I wage a perpetual war against moving average traders. And that's not personal to any one individual. They're all good guys. I started with it. I had it force-fed to me. I had to deprogram garbage out of my system. It's time others did that too. And like with everything in this world, you've been fed nothing. So what are we actually seeing? We're seeing a 50% retrace up on this candle that just run. I mean, it's perfect to the T, guys. I'm sorry. Give credit where it's due. Hit the like button right goddamn now for someone who's trying to do his damnedest to give you the best take on where the markets are right now. And then you're getting an insider candle that's just inside the range there and hammering. So the idea is, and I'd already drawn some flag lines to drag in here, is you maybe we've had 3 flags around key levels already. 42 and 40. That was the original break that everyone felt we were so wrong about downside on. 30K over here, and the head and shoulders downside target cluster of key levels. If you don't like my theory, have a look at least at how it's done so far. and then make up your mind. Then the run of these key levels, and now you're getting short time frame hammering, and you could either do another flag. We seem to have a thing for flags right now. We can do another flag, or we can do a rising wedge. There's many other ways that you can go up in a grinding like fashion that is not long-term worthy of the salt it's scribbled on the chalkboard with, but will be adverse for you entering shorts now if you're a shorter. And if you're exiting hodl pots, you should wait to get out a little higher. Whatever your plan or whatever you're doing, this is not advisory on what you should be doing. What is my overall opinion? Well, if you go back to that chart I shared, the next levels I give you is 15. And I continue to suspect continuation. So my probability meter is to, after another rally, as we rallied into the accumulation box with this flag at the 30K level, a further sell-off. In other words, this is so bearish in terms of the 12 years reference you have, in terms of give back, that it's likely to kill a lot of people. Also, it's determined by the Fed, interest rates, and the debt markets, and they are hell-bent on pain. Why? Because they're going to feign killing inflation that they created. As a result, asset classes are going to deflate. So asset price deflation is going to be chronic in an environment where money is dying, debt not being paid or collapsing that can't be paid, people throwing their keys back at the bank for their houses because they can't afford the higher payments, is loaned into existence money that is now gone, write-offs, balance sheets. You're going to see bank failure, debt failure. To get the new CBDC system and the UBI direction they want to take, they must kill the old. And you are probably in the process. We have not said this year is reset. This is the first time I am saying this is the beginning half of year of reset, H2 2023, 22 into 2023. Problem is coming. Reaction is coming, and they in the end will come with their solution, but they're going to keep you in the problem and reaction mode till you beg and accept any solution they offer. Next levels, 15K and 12K. Where did those come from? Now, these aren't clusters of levels. These are single key levels, but 15K as a round number, which we can put in along with 20K, which we didn't put in. 15K is also a very significant number in terms of roundness. So if we just go here and put it on, it's going to be perilously close. So there are actually two levels there. There are actually two levels in there. They're just exceedingly close to each other. So we normally do our key levels in dark blue, and we put that on there. So you will have a head and shoulders target from the all-time high that we've considered the all-time high since the 55 zone. We don't say, hey, we always said it was the 50 all-time high. We thought we were going to have a great Christmas at one point. And we absolutely acknowledge that roundabout here when we got actually the very first flag, bear flag. So we should actually, didn't mention this one either, that was here, was at, you guessed it, the 47,000, which was the neckline of the head and shoulders to the left, the 64,000. It ran straight through that flag. It's very typical that key levels of significance, as you meet them when you flag, dissect the diagonals of the flag before spilling lower on the way down. So you had a selling impulse down into there. You had a bear flag at the 47K, and then you went down into there. Then you set up another flag. We have had one flag, two flags, three flags. Why not call for a fourth? It's a decent shout. Does that mean I'm absolutely saying it has to be? Of course I can't. I'm just using on balance probabilities. Keep on keeping on. Continuation to downside This macro flag that was a huge one at 30, the big accumulation pink box zone had to be run with momentum. So you were held up, everybody trying to hold up the price, exhaustion, capitulation to the next 10 grander lower down. Here is your next 10 grander lower down, and it happens to be the head and shoulder target. I would not bet against the 15K level being run, and I would bias to that being run as my probability based scenario again. So let's just get that line back on, and for my OCD, make sure it's just the perfect round 15,000. Put your alerts on. These things are coming. There's more downside. But before that, some form of rally, we'll go with a flag. But if it's a rising wedge, I don't consider myself wrong. We can expecting continuation. If you get a macro inverted head and shoulders with marginally lower lows and a head, and you could have a more sustained rally period, that could be the Fed temporarily backing off. It's possible. I don't feel it. They're going to keep their finger on the power button. There is that 47,500. So the key levels of significance that you've had flags on are the numbers we gave on this Crypto Sniper channel absolutely repeatedly. And they have continued to be the diagonals of every bear flag on the way down. 47.5 is not mentioned by any other technical analyst. No one else called this head and shoulder the way we did. 42K and 40,000K. Key levels. 42, not a standard number, running straight through the two diagonals of this flag. You had this, you had the dip, you had the rally back up to the 42. That literally was your death. You gave up, you broke the basing ascending grind line, straight rally back with typical behavior, which also touched the 40. So you kissed the 42 after you lost it on a rally back. You kissed the 40 on a rally back. You spilt to the next level and you flagged again. 1 flag, 2 flag, 3 flag. I'm going for 4. On the way down. Next level after this is solely a flag target and is at 12,000. So that's a stretch further. I'm going to say for now, taking it one step at a time, after a rally here, Bitcoin could be shorted somewhere in the low 20s, 21s, 22s maybe, or 20,500-700, and you would get at least a 15K run. That means a 14K number. And that doesn't mean it's a bottom. It means it's the next level where you might rest. This is a huge structure of great relevance. This flag that we drew, and let's be clear, we drew this flag the better part of 2021. We were already discussing this, the back end. Could this be head and shoulder event? And we've been discussing it in detail regularly, again, on our crypto channel. So that is a macro sell-off, and it would be significant. So I've got it on log scale. If I just go regular, you can see how everything stretches out. And you can see again how this is a clustering. So the 8K is if you only run the 12. By that point, I think you would have real capitulation and true misery. We need that event. 15K would be unwelcome and starting to, oh my God. But crypto people don't realize that there's much more. There's still a lot of hodling. There's still a lot of keep the faith, guys. There is not max pain. We need silence, death, and misery, unfortunately, to know that the fullest levels of pain have occurred. And I think around the entire funnel, and if we run this funnel, it could be even lower than that level. But the next trip, we're only reasonably accurate one step ahead. We need to see how we behave towards achieving that lower level of the 15K, and we'll see it. So what else happened in terms of this crypto technical event? Well, we also were pointing out that Ethereum is, as Bitcoin's key level was the 20K, Ethereum was the 1K. And of course, now it has run that 1K. We showed the pause here, a real descending triangle of great concern there. And you can see that absolute spill. That was a nasty spill that brought it down to those levels. And then you had a small bounce, and we showed the descending triangle with that key level waiting there at 1,000 to be run to the downside. So again, with Bitcoin rallying, expect Ethereum to rally, and as a slightly higher beta, it might rally quite significantly. It's puked essentially from 1,800. There's nothing saying it can't rally up to 1,400s, could take quite a bit. That doesn't mean it will, but I would be looking for shorts on short-term basis the 15K run of Bitcoin, which could mean more pain for Ethereum. Long run, I think Ethereum is control structure, the application of choice, and I think it's actually going to do very, very well macro after the bloodbath. After the bloodbath and innovation. So this is a true key levels run. So we had Bitcoin losing the 20K and heading for our 17.8. We had Ethereum losing the 1100s, where it was uneasily paused descending triangle structure. You can see it on the smaller time frame there, that we were drawing this low vol, hanging heavy. You do volume by price. We get into much more detail of that inside our community, by the way, and you can check that out. I'm not going to do this. This is an update just on price levels. Volume is deeply valuable, but we do it particularly on price levels, which dovetails with our key levels of significance thinking, which, by the way, if I just put up Bitcoin, I'll do one version of it for you. You could have seen how our key levels were already very strongly endorsed when we first ran from our first cup gold nugget. Let's do this just to give you one example. And why also that you had to be ready to accept that this was, let's go to just recently at the first cup gold nuggets, why all our key levels were absolutely endorsed by the volume by price. There is our 47.5. Look at him there. Here is our accumulation box. This deserves to be in TG pink again. Here's our accumulation box volume. That was there. This was not a high volume knocking on the ceiling looking for the loft at all. The volume was heavy to the low side and was on all our key levels of significance. See it there again on 42. Very, very strong and firm. Everything above 43,000 actually had accumulated very low volume. We were not pushing higher at the 69 on high volume. You had generally down here, you were moderate here because of a lot of complexity the first time and fell away horrendously here. This was thin air. This was Mount Everest on very thin air. You needed an oxygen tank and most of the downside was waiting for you. So we do much more detail on that. You can join our community, themarketsniper.com, for further analysis on the crypto markets for Bitcoin. So let's go back and just do this. Apart from Ethereum, there was also, as Ethereum was letting go its $1,000 level, you also had the likes of, let's take Ripple. It's been around a while. I think it's going to play a role as a banker coin. You also had Ripple doing the same on its 30-cent level. Now, I don't think the downside is as huge. It never participated in the bull market near as much with the SEC issue, and this is a smaller time frame setup. I'm dropping to the 4-hourly here, but we highlighted again the resistance of funnels. Funnels break worth momentum. We have all the price behavior from the way up because we keep our work and it's price based. It's not moving average based. It's relevant and it's always relevant and it's always at that level. It's not some moving, jagging target that is a slowed up, lagging version of price. Note how it provided support first, and then you wound up and you bounced, and then you smashed with momentum, and since then it created resistance that you've been set up in a downside break that we've called for 26 cents. It's a small trade. You'd be getting in at the 40s, and you're going to lose 14, and you know it's not a mega collapse. You could overperform. What did we say? You get a rally at our interim. There you go, little broadening structure. You can learn all about those and how we deal with those in terms of our material, and you can watch us implement it in real live trading scenarios at our second interim. And then next you get the funnel support, a wind up. Then you get this rather sketchy descending triangle where there's super low vol, and guess what? You put your foot over the key line for the first time. That tells us in the longer term, after a rally, and you're going to get support again, you will likely break this and make our final target. We keep on keeping on, assuming success. So that will see us through 26. Hey, somebody could, at a technical level, short at 31, 32 cents and still have a decent short time frame trade. Not advice. You should have been net short long ago. You should have been doing exceeding well. Bear markets don't have to mean pain, but for so many people, it's pain. not held any coins of any variety and traded short and made it money. Account up. Fiat value up. In fiat, that is growing in Bitcoin value. So you're growing your fiat, that's growing in Bitcoin value. You could be in that situation, but you have to understand what's going on and you have to have the real macro in it. So the key interesting element of this video is that Bitcoin shed 20K and ran key levels of significance. Ethereum shed on the same weekend 1,000 and will now rally back above. And ETH XRP let go of its 40 cents, and guess what? It found the 30 cents break and is now having a rally. Tell me round numbers and key levels of significance with HVF funnels and interim targets are not absolutely amazing trading methodology. It is the best thing you can do. You can only learn it from us. It is self-originated by myself, Francis Hunt. By the way, I will also be going to Greenwich Park today to do a follow-up on my video that said 7 years ago, a major polarizing wealth event is going to occur. 2015, I stood on a hill where the astronomy was, and I said, it's coming, hear me now. You need to take active control over managing your wealth. This is how you need to position. I will be updating everyone. That'll be on the Market Sniper channel. Follow the Crypto Sniper. Watch out for imposters. We never leave comments asking for money. The only way you engage is from our website. The Market Sniper on both the YouTube and Twitter, and you can find out more. Wow, the dollar and what's going on in the indices has as much to do with how your crypto is going to perform as a crypto trader. So on the weekend, we lost 20K and we ran the 17.8 literally to the dollar that we predicted before hammering and a rally occurred on Bitcoin. The 1,000 was given up on Ethereum, also as we predicted with descending triangle targets, and the 30 cents was given up by Ripple after falling from the 40 cents range all the way down. So those will press lower. We have downside targets on XRP. There could be overperformance. This could be determined not by crypto markets, but by dollar, debt markets, and the collapse of the equity markets as a result of those larger markets. Thanks for watching. Hit the like button. We don't get any love. We do no advertising. We do not talk the control structures game. Share our content. It's currency. It's how you say thank you. We appreciate it. Catch you next time. Hope you enjoyed this update. Bye for now.